From the morning reading, small and mid-cap ETFs bounce within corrections. Small caps have been the Achilles heel of the stock market by showing both relative and absolute weakness the last 2 months. Even with this poor performance, the decline in the Russell 2000 IWM over the last 2 months still looks like a correction within an uptrend. While SPY is still less than 3% from its high and up around 3% year to date, IWM is down around 6% from its high and up around 3% year to date. A 6% decline from a 52-week high is not much in the grand scheme of things. Nevertheless, IWM is still in correction mode and a breakout is needed to reverse this slide. Hello, this is Stephen Harris, a head trader from Falcon Global, where we model best practices for investors, traders, and day traders from entry to exit every trading day. In this daily video, I provide my opinion and insights of current market trends, market timing, volatility, and hedge risk levels for the upcoming day for the key U.S. financial markets. It is 6:23 a.m. Central Time, and I'm recording this in preparation for the market day of August the 18th, 2015. Full disclaimers are at the end of the video, but be aware that this is for educational purposes only, and only you are responsible for the investing or trading decisions that you make. So let's take a look at those charts. First of all, you have the SPX, and you see we had an important breakout yesterday. We had a significant close outside of this coiling pattern that we've been talking about for so many days. Now, we had the FOMC on Wednesday, so this could absolutely trounce everything that's happened here. But today will be important to see if we get a kind of a confirmation candle that holds this outside of this coiling pattern setup. If we do, and FOMC doesn't just come in and trounce everything, we could very well likely see at least a move to the top of this range. Now, if we get another failed breakout, remember, look at this big failed breakout. It went way out just to end up right back inside the coil before the end of the day. If we get another failed breakout, that kind of calls into question. Note also we're just about at the apex of this, and if we don't get a real breakout and move away from this compression pattern here very, very soon, then you have to basically say that this entire pattern has been nullified and it's more of a just ranging action, and in the larger pattern, and this pattern, the smaller, shorter term pattern, really was not recognized by the market participants and has no power. So right now, we would say it has power, but certainly, had a very interesting failed breakout here just a few days ago, and then has this breakout as of yesterday. But as the morning reading was indicating, you have with the Russell or the IWM, a need to really have a confirmed breakout above this this pattern here, and this is really quite a bearish pullback here. We, as I said, pulled back about 6%, but we're not that far from the all-time highs, and so we're looking for, within this pattern here, this correction pattern, a confirmed breakout to be able to say that the Russell is willing to participate in a significant move higher. NASDAQ also has kind of a strange pattern here, driven by the departure from its range by Google, but then sliding back into kind of this descending channel or wedge. If it is indeed a wedge, and it readily looks more like a channel now, but if it were a wedge, that would be a continuation pattern to be expected to take to the north side. Dow also relatively weak, and would need to see some sort of confirmed breakout to the long side of what certainly looks to be a wedge pattern here. So things have been pretty interesting for sure of late. Also note, and we'll get into the morning report in just a second here, but China, of course, continues to play a role, and much of the recent declines in the U.S. stock market have shadowed big declines in the China market, and this has been on the back of a multiple yuan devaluations as the Chinese government attempts to bring their currency into kind of international standards, and part of that is removing the peg from the dollar. And as this occurs, there's been some really ripping actions over there. And indeed, as we take a look at our morning report, we'll see that it appears that China is down over 6% in the overnight. Hong Kong down about 1.5%. Japan down about 1/3%. But Europe didn't seem to be as taken with this, nor the U.S. market. Germany down just 0.07. We'll call that scratch. United Kingdom down a little bit more, over 0.5%. But when you look at the 4 U.S. broad market indices, they're basically just a teeny bit of weakness, just below scratch, with the ES, or the S&P futures, down 4 points. Crude oil down about 0.5%. The Euro down about 0.2, as is bonds, and gold basically at scratch. So pretty interesting action there, mostly driven by this from China. We'll probably want to do a little bit more research on what that situation is, but I suspect with that kind of a move, it was either a change in margin or a further devaluation of the yuan. In terms of today, obviously the big ones are looking for these building permits and housing starts. We had some very interesting information from the housing market yesterday, so this will definitely be something that people will be watching for, the health of the economy. In terms of tomorrow, we have CPI and the crude oil inventories, but the big one will be in the afternoon. You have FOMC meeting minutes. So very, very, very sensitive. And the market's likely to go sideways in the hours prior to that. And then coming up later on Thursday, the weekly unemployment, Philly Fed, existing home sales, and nat gas would be the primary players. In terms of market conditions, not really anything to get terribly excited about here. Skew relatively benign. Short-term VIX only 11.29, so relatively low. IV percentiles very low, all basically in the lower quartile. You did put in standard deviation moves by the Russell and NASDAQ yesterday, and those were bullish moves, so that certainly is a good indication that this move yesterday by the SPX and breaking out of that coiling pattern, was supported by the growth components of the market. So that was kind of interest. And then in our regular morning report, it's kind of a mixed from yesterday. Obviously, price action yesterday was bullish, but it wasn't really enough yet to really make everything get healed in terms of the level of risk that still seems to be present in the market. IBD status still uptrend under pressure. Accumulation distribution is still a D plus on S&P and NASDAQ. The GMI index actually fell a point to 2 out of 6. So, clearly some warning signs there. Decision point scoreboard, still lots of red arrows. Not great there. The intermediate term market posture turned bearish, which was kind of unusual, but again, it just wasn't enough action to kind of pull the overall weight in the intermediate term up to bullish. And you have here with the S&P just barely above the 50 line and signaling bearish. The NASDAQ also near the 50 line, this time just below. But remember, what these really are, while I'm giving you the technical readings here, these are really neutral. Now, yesterday's action was of interest and a significant breakout, but we really need to see, some confirmation before we probably start to see a lot of this reflected in these kind of risk parameters. Dow was bullish, as was the Russell. All this put together with the other indicators, we still have our summary level, threshold level 1 as our hedge warning status. In terms of volatility base parameters, we had a number of things actually get better yesterday. So you see a little less red on here. We do have that VIX daily squeeze still present. You still have this very high distribution day count. You know, things are not healthy when you have an S&P distribution day count of an 8. Also, with that action, notice that the New York Stock Exchange new highs, only 180. So while good bullish candle yesterday, there was not wide participation in terms of the number of companies that were setting new highs and the like. Also, in terms of the risk aversion indicators, there's still all 5 of them as risk off. Now, a number of these are looking like they want to cross over, but the slope and so forth is still relatively poor, and they haven't actually crossed over yet, so I'm still calling all 5 of these as risk off. In terms of special opinions, option income strategies, VIX is inside the acceptable window. Conditions are acceptable for new positions. Just consider the potential for increasing volatility that the Vega may pop up at any time, especially with that FOMC. So that should be, weighing on how you set those up and construct your option income strategies. In terms of covered calls, conditions are really still borderline, though they certainly look better today than they did yesterday. For novice traders, probably should be very, very careful about initiating new positions. Aggressive traders should consider using only in-the-money strikes or reduction in position size, or, and I really like this approach, to consider legging into those cover calls through put selling. Sell put on something that you're willing to do a covered call, willing to accept assignment, take that assignment, and then sell the covered calls. So a fairly conservative approach, but given the number of times that we have flipped back and forth over the 50-day moving average, this historic long sideways action that we've experienced really all the way back to November now, it is a setup to where you're just not being paid to take a lot of long delta positions, and you need to be very cautious in terms of the initiation and how you structure the trades, with the expectation of really poor follow-through on many of these even strong looking stocks. They just seem to go nowhere at this point the market stance. Put selling, conditions borderline. For new core put portfolio positions, consider position size or wait for that pattern to break out if you're a novice trader. Aggressive traders consider scaling into positions. I did take a position yesterday. This is certainly, we're not saying that you should not be trading, and indeed option income strategies can be ideal in a range-bound market. It's one of the things that works best because you don't actually have to have any positive movement in the market to make a nice income. But you also have to consider that the conditions in terms of low premiums, because the VIX is relatively low and the relative risk is a little bit higher, that this could actually be a topping pattern and could break down. You got to really watch your position sizing and so forth. Make sure that everything is truly in alignment with the current market conditions. Sector market posture certainly looks a whole lot better. A lot more green on here. In fact, in terms of the short and intermediate, there's no red at all, only a few neutral. Retail, we'll probably get a lot more of a tell from retail in the next few days. We have a number of important earnings calls coming out from the retail sector, including Home Depot, Walmart, Lowe's, and others. So we'll certainly be watching that sector, and that's likely to be part of the headlines in the next few days. In terms of percent change yesterday, just about everybody was positive, and really we'll call energy scratch. So a much more positive day, but still see on the 1 month and even 3 month, there's not an awful lot of healthy sectors here. I mean, you just can't see green all the way back to the year to date. on anything at this point. Utility certainly has been making some interesting moves of late after the big correction it had earlier in the year, and of course that's a reflection of what interest rates are doing, and of course interest rates could move in a very big way with whatever announcement comes out from the Fed. So this one's going to be right on the edge of probably a significant move one way or another. So that's probably enough for today. If you find what you're getting here is helpful, we greatly appreciate you retweeting us to your Twitter followers, liking us on the YouTube, or subscribing to us on the YouTube channel. Also, direct feedback can be sent to support@falconglobaltraders.com. More information about how we apply all these principles to our daily trading and then how those are modeled can be found at this website. Disclaimers as always, hit the pause button if you need more time to review. And we look forward to seeing you back here tomorrow morning for the market preview. Have good trading.